Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Friday morning pre-market webcast. Okay, yesterday the bulls drove it up to 1329.5, and what you saw there, any way you slice it, that was price rejection, and we traded off into the lows of the day at the close, and that trend down has continued. Looking at the September contract, we traded last night as low. Where did we make our low? Down at 98.5, and you've got two things working today. You've got the 20-day pivot sitting up at 1307.08. That was resistance a little bit after 6 o'clock, and it was just resistance at 8 a.m. Eastern time. Underneath, you've got double pivots at 1297.67 and 1297.42. That's the 3-day and 9-day pivots. So you've got a little bit of a range here. It's a 10-handle range between 1297 and 1307. If we stay in that range, you can trade that range all day, long or short. If we break out above 1307, then I would expect to see some more buying come in as we head up towards 1312.5, which is your daily pivot. Maybe to go ahead and fill the gap up around 1310 quarter, with an exhaustion level up at 1312.5. If you look at the daily chart, what the bears were able to do yesterday was get the market back below the 200-day exponential moving average on both the June and the September contracts. So the bulls with the 1329.5 high, that's a lower high. So two things can happen here. Either we go down and make new lows below 62, or we make a higher low and then we start to kind of wedge into the 1300, 1290 area. I'm leaning towards the upside. I think that once we get through the roll next week, we will see a low made, if not at 1297, maybe down at the 1288 level, and we'll see higher prices from there. Be careful trading the roll today. It's Friday. It's a summer Friday. The weather is beautiful here in New York, New Jersey area, so there's going to be a lot of people headed out early today. So I would expect a pretty slow afternoon, and we're in the middle of the roll. So use stops and be hedged. But remember that range, 1307 to 1297, as we trade it today. And on a breakout above 1312, you could see it reach up. I have a difficult time seeing it reach past 1316.5 today. Let's do support and resistance. Current trade is 1306 quarter. On the downside, 1303.70. Then you've got double pivots, 1297.67. So basically 1297.5, you've got double pivots. 1295.75, 1289.57, 1281.20, and 1279. On the upside, we've got 20-day pivot 1307.08. Then you've got the 20-day exponential moving average, the 200, and the daily pivot from 1310 to 1312.5. So if we get up into that gap fill area, you've got 2.5 handles of resistance, and that can get pretty choppy on a summer Friday. So just be aware of that. Above that, you've got fib level up at 1318.75, and the 45-day pivot up at 1323 quarter. So basically, what we did yesterday, we went from 58 handles below the 45-day pivot all the way up to the 45-day pivot, and now we're back underneath. So we had full-blown mean reversion, which we were talking about in the room, and now the bears are going to try to work on a lower low. All right, everybody have a great day. Have a great weekend. Mike Vacchi, Princeton Trader. I'll be back Monday morning with another webcast. Trade them well, everybody.